Yo, what's up guys? Welcome to another video. In the last educational video, we talked about demand. In today's video, I'm gonna talk about order blocks. I think this ties in very well with the last demand lesson, and then I'm gonna tie in more supply in the next, speak about support resistance, other things that people are suggesting I'm seeing in the comments down below. So make sure that if you haven't, leave a comment down below. Let me know what type of educational video you wanna see next, and I'll make sure to do something on that. In the last video, again, we spoke about demand, and I just brought the link chart up here. I think it's a good chart to look at given it's got so much price history. And I could just kind of point out levels of demand here and explain my thought process on how I would treat an order block and play it thereafter. We're gonna draw out our 1-day level of demand here. Price comes down, rejects, and holds just above it. This level was about a 3% range to bid. It got front ran, meaning that it left the bids left behind. Anybody that played this level as I mentioned in the last video would have gotten front ran, you wouldn't have gotten in your entry, and you would have seen price just fly up from that. When it comes back down, you can see how price gets a little bit weak. It holds that higher low there before rejecting down further, tries to hold before holding, and then picks up every single bid on the 1-day. And again, in the last video, if you play it as I said, you're playing about a 1.5 to 2x the invalidation to the DCA bid. So you would have been in this play and had a beautiful swing there. All this happens, guys, for a couple reasons. We need liquidity to fuel higher moves upwards. That's why we needed to sweep all this liquidity down before we actually had the move upwards. And people are bidding logically around these levels of demand. There's liquidity to target upwards, and there's liquidity downwards that needs to get picked up. Now, after these demands get sliced through, I said they get weaker in the last one, and that's true. When these demands get sliced through, they tend to get weaker. And a lot of the times, these lows that people are trying to protect are being swept down further because people are just entering here assuming that we're not going to test further down, so we need to liquidate them before fueling these push upwards. After these demand levels get sliced, they are considered weak, but they are also levels to play in the future. So we saw the price get absolutely ran through here after we held this swing previous, and now we're retesting it further. This is now going to be a good level of confluence on the lower time frame to play. So I'm going to let price play a little bit out of this box, and I'll explain my thought process there throughout. So we see how price reacts around here, chops around before ultimately making a move towards these lows, trying to put in a bearish retest, and it does. And it begins to reject. You could see this level reacting. If you were assuming a short position because Link lost that level of demand, then you had a good level to start to anticipate a position and build it, whether it be around these highs or whether it be a perfect bearish retest of the level before I move down. Now I'm gonna go on the higher time frame a little bit and see what happens here on the price, and then I'm gonna focus down on the lower time frame. These order blocks are meant to give you lower time frame conviction. On the lower time frame, a lot of people get skewed with the levels we're trading around. When you could simplify it and gauge that level, you could then bring it in, breathe, and start to trade around a good level of confidence that you have, or wait for it. Now, I really just want to see what price has to say around this level once it retests again, and see how the lower time frame reacts. Because again, this video is about order blocks and how to play them, guys. This was a level of demand previous that people were willing to bid. Now it is an order block. On the way up to this order block, we're seeing this level of demand print and absolutely take the price higher. So this was a beautiful demand retest before I push up higher. Another demand formed, got retested before I push higher. And I want to point these out, guys, because I'm going to draw out my rectangles for these levels of demand and see how price reacts. And these are your order blocks. These are what you're gonna play if price is trading around, you're not in a play and you want something intraday. The main reason that I'm showing these levels is because intraday, when I'm looking for a long, let's say I wanna enter a long around these levels that previously held and we retest it again. I'm looking for reasonings to enter on these flips. I'm not just blindly entering longs. And again, when these levels of demand are swept through, I like to think of them as order blocks. Everybody has a specific way they define an order block, and this is just my way of doing so. So that's just one example. Let's say we have this harsh rejection here. People want to enter in on very, very fast, swift moves like that, and they're looking at the lower time frame candles. What I liked about this level and the confluence you have to potentially take a short and assume a rejection like that is we had this hourly level of demand that piled up and pushed us higher. It came down, retested, pumped, and then fell flat. Closed the hourly candle below the level of demand that was previously formed. So now this is an hourly order block. So not only can you play them on the higher time frame, but you can play them on the lower time frame as well. But remember, the higher the time frame, the more conviction. The lower the time frame, you want to be a little bit more strategic and have more confluences lined up. But needless to say, we tested it and rejected straight from it. And what I'm focused on is what happened on this wick right here. You could have taken a short obviously here, assuming the downside, which eventually ensued from that. And that's a more lower time frame play. But again, you were looking from the higher time frame, you're looking at this level of demand. So I want to take out even lower time frames, because if you miss this level and you saw a hard rejection like that, you're not assuming that we're gonna hold this level again and hold straight from the top, and are you? You're seeing literal candles close within our higher convicted levels of demand, our higher time frame levels of demand. And now we're getting closures within them. You could then enter aggressive scalps with logical invalidations, assuming we're gonna target the downside targets of your blocks. And these are logical levels people are willing to play. You can even see how they form price action around and play them on the drops thereafter. Look how beautiful it held that candle after it reclaimed and pushed back upwards. Even if you're trading on futures and you catch this move, that's a 3%. 5% move upwards. These are good gains, guys. Let's go back onto the 1 day and see how price reacts around our blocks. Remember how we played this 1 day level of demand in the beginning. I am focused on what price is gonna do there. Eventually, price came way down, swept the level of demand that we had previous, came back above it and flipped it. This is how you would anticipate an order block flipping. These are your levels that you're playing. These are where you're playing around intraday if you're not already in positions, guys. When we see a sweep like this, whether you're taking out or not, we hold on the 4 hour, and to just take it down even further, we could look at the 1 hour and see how that plays out. The 1 hour is holding, we're moving back up, rejecting, and eventually holding these blocks before continuing upwards. The 4 hour is checking in as well. The 4 hour comes down, retests, and holds above. Now, the 15 minute is what people would probably be looking at this level, especially if you have it drawn. So I'm gonna open up the 15 minute. It's a good intraday time frame to play. And you can see people are looking for that reclaim before price eventually rejects, retesting and reclaiming before the push upwards. Look at that V recovery. That's absolutely beautiful. But you have your levels of conviction when these levels are reclaimed. These are your 1 day order blocks that you printed. And these are what you're gonna be playing in the future. Now let's open up the 1 day again. And let's see what happened on this pop, guys. We had a successful pop out of this order block, and then we retested our previous 1 day demand that held, eventually broke through, put in a bearish retest before rejecting, consolidated price before it broke out to it. And now we're consolidating choppy price action around it. This is a level people are willing to play around before the next move happens, guys. So let's see what happens on the lower time frame around this level. And we're looking at it from the very lower time frame here, guys. We had a reaction from this level after a significant push upwards at the reflip of those order blocks, a 74% move. We trapped bulls above this level. Price rejected about 20% from that lower high out of our level of demand that we drew and treated as an order block before eventually coming back on the 1 day to our level of demand, which we now are treating as an order block, closed into it, retested it before pushing upward. If you are not in a trade at these lows and you're not entering at the 1 day demand or entering on anticipation of the reclaim on that deviation, you are entering on this 1 day confirmation that we have now reclaimed the order block after getting some chop consolidation around it. And you're getting a good play doing so as well, guys. If I'm seeing this on the 30 minute, like, you have multiple chances to enter this play. You have this closure within it and reclaim with a sick invalidation, and then you get this level here tied in with a retest in the 50 on the RSI. So a little bit oversold on the RSI got you a nice invalidation here below the zone. So you had two clear plays to take on the lower time frame solely based off RSI. That's without me looking at other confluences, whether we were trading a Monday range, whether we were sweeping some liquidity upside, whatever we were doing, you had conviction to enter a play intraday based off of higher time frame levels of demand. So that's how you identify order blocks in the charts. Even after demands get sliced through, there's always a chance to enter the market. You just have to do so accordingly. I left a link down below to the exchange that I use the most. Make sure to use that, guys. Comment down below. Let me know what type of educational content you want to see next, and subscribe for more content, guys. I really appreciate all the support. I'll see you in the next. Peace.